First of all, I want to thank Stan for inviting me to be here. I think I've met so many fascinating people over the last few days, so many bright, intelligent folks, and I invite you to continue this discussion once we're done today, in the future. So I'd like to give you an overview of why we are so successful and what has happened to Bermuda back in the day. What you'll be surprised to find out, actually, is in this century, the first insurance company actually was an offshoot of AIG, and it happened in the late 40s. And if you think about AIG and its roots in Shanghai, and what was happening in China in the late 1940s, then you would see, wow, that was the first time the Bermuda created a solution for insurance. And then in 1963, a guy called Fred Rice had this great idea, well, it was partly his idea, to sort of self-insure, to create companies. If you were a corporation, you could insure yourself. Instead of giving the premium to somebody else, you could reduce the frictional cost by creating your own insurance company, and that was called captives. So in the 60s and the 70s and the 80s, the captives grew. So 90% of Fortune 500 companies have at least one captive insurance. They're not all in Bermuda, but Bermuda has now taken the mantle as the world leader for captive insurance. And I think that's very important. So we then have to move on to the mid-80s and the asbestos issue in the United States. And 30 corporations had this idea, oh, wow, why don't we form a solution in Bermuda? So here comes another solution. Those companies, including Marsh McLennan, which was a major broker, came together, capitalized a company called ACE, which, by the way, was domiciled in another jurisdiction, and the next year, they actually moved it to Bermuda. Not to be left behind, another set of investors formed a company called Excel. Now, Excel is now XL Catlin, and then became AXA XL, so there's a lot of stuff happening. And then they said, they domicile in another place, and then the following year, they moved to Bermuda. So Bermuda seems to, if not be the first starting point, it's definitely so far the ending point, as I see. So then we have to fast forward to so the stalwarts of the industry are ACE and Excel, by far, up to the 80s. And then we had something called Hurricane Andrew in 1992. And that sort of changed the landscape of catastrophe insurance. Because prior to that, insurance was based on historical losses. We know exactly how many cars crashed in Germany in the last 50 years, and we could price that into the insurance premium, for example. But we don't know when a hurricane is going to hit, and we're still waiting for that second major earthquake in California, or third one. So Hurricane Andrew, all of a sudden, Bermuda was another solution. A lot of companies capitalized in Bermuda, several companies, and it was also the birth of modeling. So where you don't look at historical losses necessarily, you look at future losses, and you do what you call Monte Carlo 100,000 simulations of earthquakes in different parts of California, or simulations for windstorm in Japan or anywhere else. And those companies took advantage of that technology and capitalized here. So we move forward again and that was called the class of 1992. Then in 2001, we had the World Trade Center episode, which all of these things are most unfortunate. But the good thing is in this jurisdiction, we had the companies here that paid, if not the majority, a lot of the losses for that. But then when that happened, we had more companies, more corporations forming new companies, and that was the class of 2001. So all of this time, the Bermuda captive industry is moving along, but then we have property catastrophe companies being set up using types of modeling technology. And then we had 2005, and you think, when is this going to end? So 2005, we had Katrina, Rita, and Wilma. And I think we all know what happened with Katrina. Wilma had devastation in Florida. Rita, you may not know, when it went to Houston, it just took out all the rigs. That was expensive, but you probably haven't seen too much of that. So again, the class of 2005, we have more companies coming to the island, because it was such a great place to do business. The jurisdiction was so clean. It was just the glory days. And of course, that continues to go on. So what I would say is, now we fast forward, because I don't want to take too much time from really what is the core of this presentation. In 2017, we have him, not from the church, but Harvey, Irma, and the other one, Maria, which of course devastated Puerto Rico, as we know. And we're making payouts for that all the time. And then we had the wildfires in California, which was severe, as you know, or some of you may not know. But I know because I pay those losses. So once more, Bermuda stepped up to the plate. We had liquidity, we had the companies, and we continue to pay all the losses. Now, that's 2017, 2018, we just had Michael, so we're now sort of used to this. We're now in a new sort of environment, and I won't make any comment about global warming, but it just seems to be, every time I see a catastrophe, it's stronger and bigger than ever before in terms of the wind speed or the water temperature. So that's where we are right now, but I want to add just a little flavor around what else is going on. And again, I can talk only for insurance and reinsurance. There are 8 other sectors that have done very well in Bermuda. So we have solutions from AIG, we have solutions for the modeling, we have solutions now, we have the ILS market. The ILS market has grown significantly, and that originally was in another jurisdiction, but oh, wow, it's ended up here again as the major player for the insurance-linked securities market, which, by the way, in my opinion, is sort of a knock-on effect from the 2008 financial crisis. Because remember, the 2008 financial crisis, after that there was so much liquidity in the market from quantitative easing. So all of a sudden, everyone had cash, was looking for assets, and then you look and say, wow, somebody's having a play in Bermuda with something called insurance-linked securities, and all of a sudden there's now more flood of search for assets, which is also very favorable to Bermuda. The last point I would add is, in terms of the insurance and reinsurance, I've only talked about property cat. Other types of insurance are now being very, very prominent. But first of all, between 2001 and 2016, 17, there have been some consolidations, but those companies that started as modeling companies obviously diversified their business. So most companies in Bermuda now not only cover the US, but have a geographical reach, Japan, Australia, etc., North Africa, Europe. So that, in a nutshell, is my experience. Some of it, I wasn't there in 1947, but I did a lot of reading. And it's funny, I had a conversation last night about Chiang Kai-shek and Nixon going to China, so I hope you see the connection there with 1947. I would be remiss if I didn't mention that the life insurance sector is again providing another solution. Bermuda is now Solvency II equivalent, which makes doing business with Europe frictionless. So now there are companies who are using capital arbitrage in Bermuda as a solution, because those companies in Europe, they might need more capital because of Solvency II. And if you are a Solvency II equivalent jurisdiction, then all of a sudden you become a player on the European stage. If you don't have that, and Bermuda worked very hard to get that, then you are not a player. The Cayman Islands is not a player. They chose to do that. We chose to go this route. The life insurance sector, I have to say, also is providing another solution. And the solution is the XXX reserves in the United States, which is something that is onerous for companies in the United States. So there are many companies who continue to grow here in a different environment, easier regulation, than it is in the United States, and they they actually are the fastest growing insurance sector. So I see everybody is sort of thinking, why am I still talking? But I hope that I gave you a bit of, Lydia's laughing, a little bit of an overview of where we were. We walked you through now, I think, where we are. And what I wanted to say to everyone was that at every time, it was Bermuda finding a solution. So now I say I would hand over to Stan and the rest of the panel. What kind of solution do you want us to try to figure out as an insurance and reinsurance industry?
Well, I think you should be moderating this panel because that's a great intro. So when we started this discussion, you know, it really did feel like a great idea to just sum up the insurance industry. So thank you, that was an amazing summary. And it really does set the stage for a couple of solutions and the idea for solutions, which I'm sure would include Hannover Re. Why don't we introduce yourselves, William?
Sure, my name is Will McDonough. Over the last 20 years, I've worked in professional sports and in Wall Street. First 10 years was for the New England Patriots American football team. Own a management company representing Tom Brady, Gisele Bundchen, the estate for Nelson Mandela, and many others. 2007, I started a hedge fund of funds in New York with Avenue Capital. Did $250 million worth of debt and credit. And in 2010, went to Goldman Sachs, where I managed the private capital of the partners of Goldman, $17 billion across 400 partners. And then I left that to start my own company in 2013, where we bought 8 banks in Africa, took that public in 2014 for $825 million on the London Stock Exchange. Since then, been doing fintech and blockchain, and I'm the founder and CEO of iCash, which is a very closely tied to insurance. And as you were talking, I am now going to use some of your terms in my pitch moving forward, because what we have done is taken, what our company's technology is able to do, is taken the existing risk of blockchain transactions from what would be perceived to date as as catastrophe risk, which you cannot quantify, and make it such that it is car insurance risk, which you can quantify. The fact that you have 50 years worth of car crash data from Germany that empowers you to price risk on how often cars crash, and the fact that you have no data on how often catastrophes occur is the reason why the latter is that much more expensive. Our technology brings the data to smart contract and blockchain transactions and settlements such that you can price risk, and hopefully in the near future we'll be announcing with the BMA here and Marsh McLennan and others, including hopefully Ari's company, the formation of the first crypto asset-backed captive insurance company in the world, which will be called iCash, which is our company, where we will be able to stand behind a minimum of $500 million worth of risk per day of blockchain transactions, which we anticipate will open up the potential users of blockchain and of the broader technology exponentially to institutions and public companies and anyone around the world. So
That sounds like a solution.
there you go.
Yeah?
Ari?
And I think I would just add to what Will just said. So there are many solutions to a single problem. You can focus on just insurance. It's a contract. You can solve it that way. Or you can use smart contract and maybe a protocol which kind of validates the data and the viability of the smart contract. Now, we all know that cyber insurance, if you're a cyber insurer, they are trying to protect a cryptocurrency or exchange or any business to deal with cryptocurrency. It's very hard. The traditional insurers are not quite up to the task at this point in time. They're not very comfortable at this point in time. There's some parts of the crypto market which probably can derive insurance, especially the ones with cold storage, but anything to do with hot wallet or exchanges, it's very hard to get insurance. I think captive is definitely a very good solution to such a problem. and having a protocol which validates the smart contract itself, in a way, is an alternative to insurance. In a way, when you create a captive solution behind that, you're essentially creating a complete different way of seeding the risk, which otherwise is very hard to do in open market.
Yeah, and I think a woman on the previous, or on a previous panel kept talking about trustless, and everybody who preaches that blockchain is trustless and there's no need for trust. And in fact, we disagree with that. Our protocol is called proof of trust, because no matter how much we think the technology doesn't require trust, I guarantee you institutional scale users of blockchain will require trust. And they will require checks and balances, and they will require an insurance vehicle to stand behind the validity of their transactions. And what Ari references, and I obviously agree with, is the capacity to put data against the validity of or the failure of a smart contract will revolutionize the entire space. Currently, any transaction is party A versus party B, and the settlement occurs based on a single central entry of data. And if that data is inaccurate, well, one person is just out of luck, because the blockchain transaction irreversibly settles to one party, and the other person has no one to call, there's no 800 number, there's no recourse, there's no nothing, you're just screwed. And the first time that happens, the entire technology will take a big step backwards, because people will lose trust in it. And it's happening every day. You see issues people have on exchanges, hot wallets, cold wallets, transactions settling to the wrong person. The minute that happens, people aren't going to continue to use the technology. So by bringing that checks and balances, which we anticipate being able to do quite soon.
So is this kind of a middleware layer between the protocol and the user?
We're calling it a protocol because it's between the blockchain or the decentralized application and the user. The user elects into it at the origination point of their contract or their transaction, pre-funding the capacity to adjudicate it, so that they pre-fund it. If they don't activate it, they get all of that money back, so there's zero cost to the user. If they do activate it or utilize it, assuming a cost of 25 basis points, they only pay that 1/4% because they feel like they got screwed out of 100%. So the costs are de minimis, and the recapture is massive, and we think that should be a sound business model.
Pay for your mistakes. Ari, can we just dive a little bit more into envelope risk? I'm excited to see you here on the stage because, again, last summer we talked about your ideas, and we had all sorts of ideas about what it could mean to tokenize the insurance industry, how to tokenize cat risk into like scenarios, and I think that lots of people are working on this now. It seemed like a weird, faraway thing, and now it's actually here, and it's only been 12 months. Tell us a little bit about Envelop and how you guys are using AI to price risk.
So Envelop risk, we underwrite cyber, and the way we underwrite cyber is we use artificial intelligence to look at various trends in the cyber threat landscape. The reason it's required is because cyber risk is a complex adaptive risk. It's not another like hurricane or natural catastrophe where you have, or where the patterns are quite stable over a period of time. In cyber, you have micro and macro trends where the threat landscape can move quite quickly. And there, we definitely needed a way to be able to quantify that and be able to look at where the risk sits in the portfolio and be able to provide a solution which otherwise is non-existent in the market. And I think this is just the first layer of it. I think as you move to forward, and there are many use cases of the AI. For example, right now, the way we structure reinsurance, we have just a few ways to structure insurance. We use like something called a quota share, which is kind of splits the losses and premiums in a certain specific percentage, and you have excess of loss where you have you take part of the loss above a certain threshold and up to a limit. But that's a very human way of thinking about it. It's in our experience set, so we think in that way, in a certain combination. When AI looks at it, it can look at all the other alternatives which are possible, and once you can optimize on the overall portfolio, you should be able to find that particular structure, which otherwise a human might not have even thought about, because we have, we are set in it, we think in a specific way. So I think there are lots of interesting applications of AI in the reinsurance space, and with crypto, I think it moves to the next level. And why I will be very candid and why I'm very excited about crypto is because there's a chance of creating an ILS 2.0. The ILS industry so far, I mean, of course, cat bonds probably are tradable, but there's not the trading volumes are slim. And then there is collateralized reinsurance where you have to hold the capital for a very long period of time. You don't have any liquidity on that asset. So if you're working on a longer tail line of business like casualty or our favorite is cyber, you have to hold the collateral for a number of years. You don't have the liquidity behind that. Now with token, I would say like security tokens, you could essentially create a regulated way to punch liquidity in an otherwise illiquid asset class. And I think once
Is that because the market is larger? There's just more people have access to it? Because right now, how do I invest in a cat?
For now, if the ILS funds have to get into something like a casualty business, they have to hold the capital for a much longer time. So it's not very lucrative for them to do it. On the other hand, if you have a balance sheet, you can hold that deal for a longer period of time. So you could get leverage, but when you're using collateralized, you need probably liquidity to access that market.
Okay.
So I think that's
So we have just a couple of minutes left, and this is such a big topic for the island. We could probably do really a whole day on this. I want to circle back to Nick, and this idea of focusing on solutions. These are two new solutions, but how is this going to intersect to the actual industry? You have
That's fascinating. But first of all, I have to say the disclaimer that Ari and I work together, and we did have a number of conversations about where the future of Bermuda is going, where the future of technology and the future of insurance is going, and reinsurance. But Ari talked about AI use in cyber, which is great. What I forgot to mention is that one of our next steps in insurance and reinsurance is to make sure we capture the cyber business here in Bermuda.
That's one of the things where I want to go with that.
So it's very interesting because if we want to capture the cyber, we don't know how to price it, and Ari might have a solution, but then Will is creating a captive that you need insurance because maybe you have the risk of losing that crypto through a cyber attack or something else. So now you have a second layer where the insurers are, okay, I'm confused. You see what I'm saying? First, I'm trying to understand the pricing of cyber, then I have to understand the pricing of cyber crypto or crypto cyber. And that's,
I think
that's going to take a little bit of time.
I think to make it more simple, and your timeline was helpful to me further in this regard. The earliest implementations of insurance were mega corporate insurance, and they were shared insurance vehicles. The second step of that was people forming captives to be able to have more direct relationships with specific company risk. And now where we're at in the token economy and in blockchain is enabling people to have very specific personal risk insured. So I, transacting on blockchain as an individual, don't need the benefit of a big corporate overhang and don't need to commingle my risk with 10,000 other people to get that protection. And so the ability for Bermuda to stay on the cutting edge of people and AI enabling people, like for example, every ride you take in a Tesla, you can buy micro insurance on that movement from this location to that location. Did you go above the speed limit? Was it at rush hour? Or was it in a public, a highly populated place or not? You can get very micro with AI and with blockchain and with tokens, which will allow the next phase and maturation of insurance in Bermuda and all over the world to be much more specific.
And let's be honest, this is the $1 trillion opportunity for Bermuda to lose. Right? Because when you have 80% of the reinsurance market, and it's about to get tokenized, and every single other jurisdiction would kill to have this kind of an industry in their jurisdiction. It's really Bermuda's to lose. However, if you don't tokenize and you don't figure out how to price cyber soon,
It's gone.
it's gone.
Yeah. And it's,
Because it's winner take all.
and we're the highest rated jurisdiction, okay? And those examples I gave you before where they went somewhere else and then came here, we can't afford that risk this time because those guys out there are paying attention.
And
they
it's
are
decentralized.
they
It
are
doesn't have to
challenging.
be anywhere.
No,
Yeah.
and so Black, right? So Black Insurance just launched. They're in Lithuania or Estonia. I think they're in Estonia. And they're doing tokenized insurance policies down to the individual and down to the scenario. And their, their ICO is
Because in the
underway.
decentralized world, you don't need a regulatory body and you don't need that oversight that Bermuda has benefited from having clear standards around.
So here's the final question, because we've got to move to the last panel, but I think it's important. How much time does the industry have to figure this out?
I formed our company here because of the inherent trust that I think this jurisdiction has in the eyes of the world and in the eyes of investors. And it's not known as a place that's just a P.O. box and a tax haven. It's actually a place with progressive regulation. But they are lucky that that's the case because I didn't need to do that and I could have done this anywhere. And if we did end up doing it in Puerto Rico for a different reason, it would not have changed our business at all. So if the insurance community of Bermuda doesn't embrace this technology quick and say they want to be at the forefront and regulations get adopted that make this a place that's pro blockchain, pro crypto, and finds creative ways to interweave those things with insurance, it could be in Estonia just as fast, or Cayman, and there's nothing that people need the regulations to protect them from.
Ari, final word?
I think between 5 and 10 years, there will be a massive shift in the way we operate in the industry, in the insurance industry. I would say like it will be a confluence of many technologies and a balance sheet to back that to make it more efficient. And I think Bermuda is definitely the leading jurisdiction to be able to manifest that happen.
I think 5 or 10 years in traditional insurance, 5 or 10 months in blockchain.
Very true.
I think as the Premier said, it has to be the right fit. I mean, we have built this jurisdiction and we don't want to take any risks that would upset the pillars of the economy at the moment. Without compliance, you do not have confidence. That is the standard right now, which is probably going to change in your world. And it's kind of two worlds juxtaposing and trying to understand the other world. And that is going to take some time. But I can't speak for the insurance industry. Maybe the head of the Association of Bermuda Insurance and Reinsurers might have a better answer. But from my perspective, after being here in 17 years, in cat business and working in Bermuda, I think we are here to listen. There's going to be some education, and we look forward to meeting those innovators in this space to move Bermuda forward, if indeed Bermuda ends up to be the right place.
Well, let's make it the right place.
All right.
Right. Okay, thank you very much, gentlemen.
Thank
Great
you.
conversation.
Thank you.